Hey everyone, welcome back to another market closing live stream. It is an earnings day, which is going to be fun. Although earnings really don't take off until tomorrow. We're going to get a little bit today, and tomorrow's CPI data. It's going to be big. Market's a little nervous on that. Today, you really have just smaller companies. You've got Pinnacle Financial reporting, Smart Global Holdings reporting today, a few other companies reporting. Nothing crazy big. Tomorrow's going to be a lot more important because tomorrow we have before the bell, JP Morgan, Delta, BlackRock, First Republic. Tomorrow, not that much. Okay, it's mostly before the bell tomorrow. Yeah, esports, entertainment tomorrow, and so on. All right, so really tomorrow before the bell, we're gonna have a lot of activity. We're not only going to have some of the banks reporting and Delta reporting, but we're going to have CPI data. So tomorrow morning is gonna be really interesting because it's really gonna start off the flavor of the rest of the year. We'll see how it goes, but I'm excited. I'm also, I'm good either way. I think that's the way to go into this. If the market falls, I'll go shopping again. I've got some money left. I did spend most of my cash in this last dip, which I was happy about because I like being allocated. I don't love sitting around in cash. But there's still money left, and so if we can allocate that, I think that'll be fun. So we'll see how it goes. We have overall a mixed market today. Energy doing very well because energy is doing very well, and by that I mean that as oil's going up, energy stocks are doing well no matter what they are. Pretty mixed on the indice front. Look at this. You've got Dow Jones Industrial at 0.17 to the downside, 0.1 for the S&P to the down, NASDAQ 0.03 to the up, Russell 0.58 to the up. Oil sitting at 83.33, relatively unchanged here, and the 10-year Treasury bond actually down slightly at 1.577, which, given that it's right before the CPI release, kind of interesting that you think all of a sudden we're seeing a push over here on treasury prices up and bond yields down. Kind of interesting. It's the market. I really think the market's nervous. The market has no freaking idea what's going to happen tomorrow, but everybody's worried about tomorrow. I think it's a little overblown. I think tomorrow's really like our last remaining negative catalyst. And if it's bad, I want to take advantage to buy. If it's good, I want to take advantage of sitting around doing nothing. So taking a look at crypto as well, you've got Bitcoin off of its 57,000 again. It's possible because this morning we were wondering, why is it that all of a sudden we have Ethereum and Cardano down, but Bitcoin's up? It was odd. Well, Bitcoin finally rotated to the downside. It's now down 3% on the day. And so a little bit of that alignment again. Usually you see much more alignment between Bitcoin and the alts, and we're seeing a little bit of that right now. Ethereum 34. I did do some crypto transactions, by the way, over the last couple days, and some stock transactions. So if you want to see exactly every time I buy or sell, remember to check out the Stocks and Psychology of Money program. We've got some amazing new lectures coming out in 12 days, totally free upgrade for all the members, and the price will be going up on the 29th. Okay, so let's take a look at how some of the sticks are behaving. Got Ocugen still moving on that Covaxin news out of India, moving up 16.84%. And just like this morning, we had an upgrade on MGM with I mentioned that we could see revenue substantially higher than what is currently estimated, leading MGM now to rally about 9.9%. Pretty incredible. Had a very brief rally here on TMC, the metals. This company doesn't produce revenue yet. Well, it's revenue net money loser, and it seems to sometimes move a little bit with momentum. So just something to keep an eye on. Upstart lender though 333. It's mind blowing. This thing just keeps going at 728. Upstart. I'm going to go to their website again. I just want to see if it's evolved at all since they basically got rich. Here we go. Where did it go? Oops, I accidentally closed it. I'm just going to close the other one. Yeah, whatever. But anyway, look at this. Upstart. Get a smarter loan. Pay off credit cards, consolidate debt, refinance my car, or something else. fair personal loans and car refinancing. No premium penalty. For personal loans, our rates are 10% lower than traditional lenders. So instead of 30%, you're only paying 20%. I'm sorry. But wow. What a run on this one. So yeah, people got to fix their debt. I guess there's a demand for this. Solar Edge, Plug Power. We got some nice movements in the whole energy space. DQ, the Chinese panel manufacturer, Workhorse, Canadian Solar, Blink, Enphase. Some big moves here. Nice to see Enphase move with Etsy. I think that's fascinating, and I wonder if Etsy's just moving because we are going into a holiday season. And folks, one of the cool things that I really like about Etsy is Etsy could actually potentially and dramatically win this winter, thanks to being a potential how should I say this, alternate to traditional gifts. Because if traditional gifts and purchases have supply chain issues, then why not go to Etsy and find something somebody can make in their garage and potentially not have supply chain issues with? This could be a boon for Etsy. Let's see. Let me look at some of Etsy's numbers really quick. It's been a minute. So Etsy, let's see. 2021, $3.61 on EPS. So we're about 71 times, 70 times. Let's see, 213 divided by, now a little less than that, 361, 59 times. There we go. Rough mental math was off by 11. 2022, expecting to be relatively similar, growth heading to about 20%, 20 to 22% for really the next 5 years. And EPS should double by about 2025 is the expectation, which at about 213. It's not cheap, puts you at about 28 times forward. They do have an incredible margin, though, and that's one of the things that props this company up. You've got net income at Etsy sitting around 23 to 25%. It is pretty nice. So Etsy, don't sleep on that one. That's pretty nice. I like Etsy a lot. It's one of my top stocks, my top favorite stocks. Love Etsy. It really hasn't moved so terribly much to the downside either here recently. Yeah. In May we had the lows of about 160. Recently we barely hit like 193 or 175. You're not far off of there. I've in the past said under, like, once you hit over 225, it's a don't touch. But generally I like to buy it under 200. I with this holiday season coming up, I wish I had more right now. Let's see here. Etsy's one to pay attention to. So then we have, let's see, Canadian Solar at 5.4. Canoe sitting at $7. Wow. ChargePoint doing nice at almost back to $20 on ChargePoint. Very nice. Look at Affirm. Affirm was green, then it went negative. Then it took off again here. It is shot. Oh my gosh, 141. My goodness. There's another one that selfishly I kind of wish would fall so I could buy more. We talk about this one frequently in course member live streams as well. All right, let's see here. Okay. All right, let's do a little bit of searching here. Okay, I'm going to do a little quick hunt here on Etsy. Give me a second here. Etsy, wow. It's actually maintained its Alexa ranking basically throughout the year. Page views per user have been actually popping off a little bit in the last month here. Time on website in the last 30 days is up about 2%, and page views per user about up 8%. This isn't even the app, folks. Wow. I'm going to do a quick trend search. Let's see here. Etsy. No real change here over the last month on trends, or the last year, quite frankly. It's been a slow grow. been consistent. And what's really important is for me is that it hasn't been falling, because we really shelved up in the pandemic, and it really has not been going down. That's incredible. Now, Etsy slime is trending, but so are Etsy face masks. Really? Face mask? No, they're not. Okay, yeah, no, they've been plummeting that search. That's what I thought. Okay, so that's old news. Oh, that's in the past 5 years. Okay, yeah. I wonder what's been trending in the past 90 days with Etsy. Maybe that could give us a little bit of an insight. Ah, look at this. Cards Against Humanity, Etsy fall wreaths. Is Etsy legit? Etsy Disney shirts. Okay. Those are some interesting search trends over the last 90 days. Let me look at the last 12 months. Last 12 months, Etsy official website, Etsy seller login, who owns Etsy, Etsy return policy, Etsy order status, ornament art. That could make sense why you're seeing more of a spike. People are getting all festive again, you know? They're getting festive. That's what it is. Yeah, Pinterest. Pinterest has been another one that it's just not so superb on the search trends. This company I've got some dollars in. Okay, Brian Laundry Pindery is searching, or Pinterest is trending. Butchered those words. That's interesting. But 90 days been stable on Pinterest, just for Google search trends, slightly down in the last 12 months on search trends. 5 years you've really been combating though a downtrend. It's not so great. Yeah. Yeah, another one of the things that's trending is how to delete pins on Pinterest. Okay. So people trying to get to know how to use it, I guess. Ooh. Wait a second here, though. Pinterest just had a bounce in August. Why? On search traffic. Why? Its page views are down 1.9% in the past 90 days here. Time on websites only up 1%. I wonder why its search rank all of a sudden would go up on Pinterest. Certainly don't see that on Google search trends, and we'd have to try app search trends, but I think it's a little more tricky. I'm going to put pins question mark here. And it makes you wonder too. Let's see their profitability. Let's see how we've been trending on this one. So if I do, for example, a quick little pins look on their financials, we've got a nice margin as well. 2021 has been crap, and so have the prior years. Their forward margins expected to be 25 to 30%, which is very good. They're expected to their EPS profitable for 2021, expected to come in with $1 for EPS for the year, and we should be able to double that EPS by 2024 with 20 to 30% growth over the next 5 years. So I mean, the thing's growing. I guess if I had to choose, I'd rather be in Etsy, especially since so much Pins pushes to Etsy. But then again, Pins has the discount on the share price. When we look at Pins, Pins has been evaporating at $51. The thing just gave up any kind of semblance of support that it had. Really sitting around $50 right now. Of course, it's ran up substantially from where it was during the pandemic. But, oh, look, Matterport actually sold down intraday here. That's nice. Yeah, look at that. Matterport kind of sold off there to 1928. Enphase still running. Etsy still running. Looking at the losers. Let's see here. Some of the blockchains. Hippo's still in pain. Dutch Bros. Owlet. Still down 2%. Okay. Google. UWM. Ubiquity. Okay. I mean, not much terribly has changed here during the day. AMC, I feel like slightly red here. Yeah. Well, interesting consolidation we're seeing right in this channel here between 38 and 40 is a consolidation. Well, let's see if we can sell any puts. Do we want to sell any puts on anything? I don't know. Let's explore Hood here. I see someone asking in the chat. I mean, it's fallen nicely. So let's see if we go to December. What's December take us out? 66 days? Wow, Christmas is coming soon. So if I go to sell a put $7, it's not bad. That takes me down to 34 on $34. Wow, 7 divided by 41. Wow, that's not bad on Hood. I've got some good exposure to Hood, but that's actually not bad. And then DocuSign has been doing a little bit of a fall here. Let's explore Docu for a moment. DocuSign down another 3% here. If I drop in here and I go for a December on DocuSign, let's go to the 50 here. 250, 15.95 divided by 250. That's about 6.8%. I mean, that's, gosh, the Hood one's much more juicy. Jeez, yeah. What's up with Hood's volatility? Let's see here. Let's do a little look. Short-term end phase calls. And JPM's going red hard. I don't know about that. Let's see here. He's falling into the close. It's kind of doing that almost institutional style sell-off again towards the close. We've seen a lot of that. So I'm going to look at historic volatility on Hood. Okay, Robinhood. Historic volatility. Let's see what we got. So Robinhood's historic volatility is in the toilet. It's way down. So usually, you'd want to sell your options usually when the volatility is a little higher. But pricing can be a factor as well. Tesla has had a little bit of a spike up in volatility, but it's still dead low right now. Wow, crazy. Okay, what about a firm? What's a firm doing? See, if a firm's still at high volatility, it could be very interesting. I'll tell you, Hood, though, that's pricing just looks juicy on it. The market's really thinking it's going to fall. Yeah, Hood started, or a firm's volatility started coming down a little bit. Okay. End phase, I don't know, again, that I would buy options on ENF right now. Let me see. I mean, maybe, but I think their volatility's popped off a little bit. So I wouldn't want to buy. Oh, yeah. Their volatility is relatively high right now. This is not, I mean, this is actually the time to potentially sell options. Let me see. It's much safer than Robinhood, so it's not going to have the same kind of premium as Robinhood. Yeah, it's not that great. 325 divided by 170. Oh, that's October as well. So let me bounce that to December. Whoa, where are my December options? Okay, seriously, no December options? That's lame. All right, fine. So if I sold these 14.3 into 170s, that's about an 8.4%. Not horrible. If I go to Jan, that's about a 19, but it's going to take me a while longer to get there. 19.45. That's going to be about 11. That's not worth it. I'd rather go for the Nove. But if you got, I mean, these contracts are expensive, right? Like you'd have to have collateral for these. Every 10, you'd have to have about 170K collateral. If you went to November 170s here, it's basically at the money. I don't even think I have that buying power. I would probably do that because the volatility has popped off here recently. Let's see if I don't know if I have the buying power for this here. Apparently I do. Cool. Let me quickly post that my little buy alert. Just pop off the SPY here quickly. But yeah, remember, folks, anytime I buy or sell options, crypto, stocks, whatever it is, I send alerts. And it's really just because if I'm reviewing what's going on in the marketplace and I'm like, oh, this is interesting on the volatility graph, or this seems like an opportunity, or this, that, or whatever, it just gives you something else to consider. It's not meant for copying. Okay. There we go. Sometimes we'll do those live. Obviously, most of the time these are not live, but that's cool. I don't mind selling puts when volatility is up like this, especially right before CPI. That could be interesting. Let's see how the VIX is doing. I mean, we're at 19. We're still elevated. So we're not at some crazy high levels here. Let's see some other ones. Goog. Yeah, I don't know what to tell you about costs being halted. I'll do a quick search here. Costs. Okay, individual costs paused for volatility after climbing 23%. Okay. Prevails in Apple IPR patent challenge. That update just came through about 6 minutes ago. Some kind of lawsuit they must have won. Let's take a look at this. All right, so this stock has just been going to the toilet. I don't even know what cost does. I just know it's halted right now. It's been a momentum play. Know that. It is cost designs, manufactures, and sells stereo headphones, loudspeakers, and related products through department stores, military exchanges, catalogs, blah, 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 blah. Okay. Fascinating. Not really. But anyway, it is it's 200-day moving average. It just shot up above its 200. Wait, hold on. 1880. Yeah, it just shot above its 200-day moving average. Barely. It's barely above its 200-day moving average right now. So it's been a bleeder, been a momentum play. These are all momentum spikes that it's had. Cost is a big momentum play. Let's see if we can get short interest on this. Give me a second here. Okay, let's see here. Black app, run app. All right, let's see what there is to do here. So short interest is on cost. So it's only 3.4%. So I don't think you could really call this a short squeeze play, despite its reputation. Cost headphones. What is this thing? Legendary sound, legendary color. It looks old. It's like old school stuff. A sound of cost. I don't know. I've never heard of this. They sell it here. Cost. Cheapies. A little cheapies is what they are. Wow. Cost. Let's see here. Costs. Let's see. Financial analysis. They're barely profitable. Tiny market cap. This thing could definitely move. Teeny tiny. It's like a $200 million company. Be careful. These things can move up fast and fall fast. Yeah, it was part of the GameStop move. I know, that's crazy. Well, we'll see what happens when it pops off or opens up here again. If it does. We'll keep an eye on it. So charge point 4.77. Nice. Sweet. Keep pushing. I'm just blown away on this. What is the P, by the way? What is this? P? Let's lock this. Maybe that's position. That's what that means. It means you have a position in it, I think. I see. Okay. That makes sense. Xpeng's up 0.5. ARM. Sheeb. Camber 11%. Yeah, this is, you gotta be careful with the momentum movers. Robinhood, very interesting to me. Hippo, I wonder what volatility is like on Hippo. I don't think they're gonna reopen costs on, today. Let's try Hippo's volatility. Hippo historic volatility. Oh, it's plummeted. Yeah, okay, that's why I bought options last week. All right. Well, I like the end phase one. And maybe a charge point? I wonder what theirs is like. If you sell, do some sell puts here. Charge point, no, it's relatively low. Are they open again? Nope, still halted on cost. They're not going to reopen today, which is surprising. Oh, did it go? No, they're just going to leave it down there at halted until the close. How dare they? It gives nobody a chance to actually put in some market orders. It means it's just going to be an after hours cluster F is what it's going to be. Ugh. All right, folks, let's listen in.
Discretionary. Those are your winning groups today. Communication services and healthcare are the losers. The Nasdaq got a little more than 0.1%. The Russell 2000 positive.
All right, folks, 10-year Treasury 1.566 actually falling. Dow Jones Industrial down 0.35, S&P down 0.24, Nasdaq down 0.15. Russell 2000 small cap bounces 0.6. Folks, this is the closing bell before CPI data comes out. Not a lot of earnings to cover today. Most earnings will really begin before the market tomorrow and then after the market on Wednesday. It is going to be interesting to see what happens with CPI data. If you are nervous, you should be. It's gonna be fun. Watch, nothing happens. It just ends up being a total dud. Like, we're expecting a big party, and it's just gonna be like lame-o, bame-o. We'll see. Let's see how things close today. Cost obviously halted. It does look like cost is back now. Moving in the after hours. Here we go. Oh, here it goes. Cost is open again. Oh, snap. It's over 20 now. Oh, man. Here it goes. You should play the game. See how it is. I'm going to try. Should I do it? Should I do it for giggles? Should we play the game, or is it going to evaporate? Probably going to evaporate. Oh, I love seeing moves like this. I mean, the 1 minute bar is funny. Okay. Let's try it. Okay, I'm gonna play the game. Oh, how much should I put in? 100 shares? That's lame. That's like not even worth alerting. This is more of a joke than anything. Oh gosh. 100 shares at $20. It's $2,000. Anyway, this is stupid. This is so dumb. Okay, I'm gonna set a limit at 1 penny higher, just because. Why not? It was giggles. Oh, it already sold it at 1 penny higher. I made 200 pennies there. Boom. You want to learn how to day trade like that? You check out that Stocks and Psychology of Money group, because I can make you pennies. Hashtag not guaranteed. As usual, though, make sure you let me pull up earnings just to double check what is having earnings today. Make sure you do, though, check out the Stocks and Psychology, or I'm sorry, check out Public. Go to metkevin.com/public, and you can get one totally free stock worth all the way up to what's it called? $70. So you want a stock worth all the way up to $70? Go to metkevin.com/public. They won't buy or sell your data. They don't use payment for order flow. And hey, you get a free stock worth up to $70. You can also follow me there at Meet Kevin. And then sometimes when I buy things, actually, anytime I buy or sell something on Public, you get a free alert. So you'll actually see if you go there, you go to metkevin.com/public. I bought something today on Public. which of course, if I buy it on public, I also send an alert in Stocks and Psychology Money Group. But yeah, anyway. Okay, so I will just post a little thing on bought 100 shares of cost for giggles at 1917 and sold at 19. Okay, not sending an alert on that. Okay, cool. So yeah, earnings aren't something that are really, in my opinion, going to be worth covering until tomorrow morning. Mm-hmm. Yeah, BlockFi is totally different than public. If you want to get a credit card, for example, with BlockFi, you can go to metkevin.com/bf. metkevin.com/bf, and they'll pay you in Bitcoin rewards. It's kind of cool. I have it. Been paying it I just paid off like a $9,000 bill on it. So I'm excited to get my crypto rewards. So after hours, Tesla is sitting at 801. Did go up about 1.74% today, dropping about 0.64 here in the after hours. You've got CRISPR Therapeutics bleeding out again, dropping about 3.8% here in the after hours. DocuSign dropping another 1.65. This is an interesting one. I wonder what volatility is like on DocuSign. Ocugen's moving off the India news. At least that's the latest that I remember from prior research. And volatility on DocuSign is not as high as what we had in September. We're sitting at about a 10-day average of about 44. Although usually this thing's, the 30-day average is 39, 50-day average is 34, 100-day average is 43. So the volatility's, been trending down. You've had this recent burst of vol here, which does make for the potential case of maybe selling some puts here. If I go to 66 days on Docu, it's too late, obviously, to do it now. That's not bad for DocuSign. That's not bad. I'm gonna put that down. Sell puts, especially if tomorrow we get some volatility. Docu and wonder how Trade Desk has been in terms of vol. Trade Desk, and let's look at some of the other ones as well. I'll tell you about them. Like Alibaba. I wonder how their volatility's been. It's still super low. Calls could be interesting on that one, honestly. Alibaba, though it is down. Historic volatility. Yeah, I'll check news. No, historic volatility is very high right now on Baba. It's gone straight to the moon here since July with this Evergrande crisis, which doesn't surprise me. If I go back to 2020, oh yeah, it's messy chart. But it's definitely elevated vol. That could be interesting. Baba sell puts. I wonder how they are. So I go to Baba. Options chain. December. Let's go at the money 165. Sell puts 13. Yeah. That's kind of like DocuSign, honestly. Yeah, DocuSign's almost better. But directionally, Baba's going up, DocuSign's going down. Kind of interesting. Baba. What about Corsair? This has got to be like the lowest volatility ever. It's just been bleeding out. Let me see here. Let's go to historic volatility on Corsair. CRISPR Therapeutics reports positive results from phase 1 carbon trial of whatever the heck that means. Yeah. I'm glad they have positive news and they're going down 5%. All right. Corsair is, well, it's at about average volatility. It's been way lower. Tesla's low right now. I'm blown away with how low Tesla. Let me see if Tesla updated today. Oh, it's still dirt low. You can't sell puts on Tesla right now. Buy calls on Tesla right now. I'm shocked. Volatility so low. Pins is another one. Let's see here. Horsehair. Nah, pins is about average. That's no fun. Neo is probably up on vol. Let's see if it is. Nope. Also about average. Tiny little bit up, but it's kind of 100-day average. RKT volatility near zero. I will look at that. Rocket. Yeah. It's very low. Not at the lowest point where it's been in the last 30 days, but it's definitely low. You go out to last year. Yeah. Gosh, it was really low September 9th. It started popping off again. How about United Wholesale? Probably on the same path. United Wholesale Mortgage. Yeah, relatively similar. Okay. Is crypto flash crash? Is that true? Hold on, I'm coming in with my fire hose. Oh, looks like somebody else already did. Damn it. It's kind of funny to see it literally go to my support line. That line has been there for a very long period of time. And like Bitcoin just listens. It follows the lines. It sees my lines and it loves my lines. It thinks my lines are like the sexiest lines that I've ever lived. They're good lines. Nobody knows lines better than I do. Interesting little move here on crypto. Yeah, I'm gonna watch this. Okay, going right back to the line here. Looks like we had a first little round of buy the dippage, and this is right before earnings, or not earnings. Well, I mean, it's earnings season kind of starts, but what's tomorrow? A CPI. Apple to cut iPhone output targets by 10 million due to chip shortages. Sucks to suck. Oh wait, that's a company I own. Zoom out to see where that line was from. Ooh, it could have been an hour chart. It's I really. I don't know. It could be a day chart, could be an hour chart. There's so many. Like once I place the lines, I don't try to reinvent. Probably over here in this channel that we've had, something having to do with this. It's a more recent. It looks like a bottom. 1, 2, 3, 4, 5, 6. Yeah, this is something that gets played with a lot around here. That 54,000 figure. But again, it could have come from an hour chart. I have no idea. That's why when I place them, I don't move them. I just color code them. Another thing we talk about in Stocks and Psychology of Money. So people are like, oh, you could Google stuff. And go, yeah, good luck. All right. So let's see here. Yeah, CRISPR's getting smashed. I mean, they are absolutely getting destroyed. Yeah, I did purposely mispronounce that. Financial analysis of CRISPR shows positive this year, but negative next year. Bumpy earnings. Really bumpy earnings. It's not good. Yeah, they're getting smoked right now in the after hours. There's costs. Hey, went to $20. I should have held my 200 shares. I could have had a few more pennies. Who cares? You sold your crypto once on Robinhood, and I forgot the minimum price I wanted it for and instantly lost. Oh, it can happen with market orders. Coroner review reveals grisly details of Gabby Petito. Grisly details. That's sad. She was not pregnant at the time of her death. Strangulation. That's sad. That's so sad. Well, actually, it doesn't. They don't really reveal. Not that you really want to know, but there's not much. There's not much in terms of details here. So sad. Oh, thank you, Drew. Look at that. Anyone who says you can Google that stuff is a fool and totally misses the point and benefits of the course. Priceless. Thank you for that. All right, so CPI, folks. Yeah, get your sleep. Don't drink too much tonight because you gotta wake up early tomorrow. All right. I mean, we can do a quick little pop over to Bloom, but come on, Etsy. Etsy. Did we look at the volatility for Etsy? I want to say we did. That would be interesting. Let's sell some puts on Etsy. I'd expect volatility to be up. Spark volatility. Oh, is this happening now? No, not really. It's pretty average right now, actually. Slightly elevated. What's this?
Conditions have, quote, all been met. Joining us now for an exclusive interview is St. Louis Fed President James Bullard. Great to have you back on the show, President Bullard. Welcome.
Great to be here. Thanks for having me.
So is this a go taper at the next meeting in November? An announcement, a vote, and getting ready to scale back that stimulus in your mind?
I'd support starting the taper in November. As you know, I've been advocating trying to get finished with the taper process even by the end of the first quarter next year, because I want to be in position to react to possible upside risk to inflation next year as we try to move out of this pandemic.
Yikes.
What happens if growth slows and the market continues to weaken here? Will that change your view?
It's going to be great for his puts.
Taper and how fast to look toward rate hikes?
You know, third quarter growth does, it's been marked down as you know, following everybody, I think, including the Fed, including me. But I've just pushed out the growth into the fourth quarter and into the first half of next year. So I think the total amount of growth that we'll see will not be diminished. There's still plenty of demand out there. There's plenty of reopening that still has to occur. There's plenty of fiscal support for the economy and monetary support. So I really think that we're still in great shape. I think the pandemic will come under better and better control. We've got technology still going on the pandemic front, pills are on the horizon, booster shots, shots for kids, all kinds of stuff happening. So I think we're still in great shape economy-wise, even though we got a setback from the Delta variant in the third quarter.
That said, are you fearful in any way that the inflation picture will force your hand before perhaps the jobs picture on its own right would warrant tightening?
Yeah, I don't know on jobs, unemployment rate, 4.8%, way more job openings than the number of unemployed on that dimension where we've got a hot job market. I think by the time we get to next spring, you could see a 3 handle on the unemployment rate. That would be back to the pre-pandemic level. So I think we're in pretty good shape on labor markets. They'll continue to improve through the next 6 to 9 months as we're tapering. On inflation, I think the story that inflation will come down naturally is a reasonable one, but I only want to put 50% probability on that scenario. And I've got to put some probability on a scenario where inflation stays high or even goes higher in the months ahead. And that's the risk I want to be in position to be able to handle at the end of the taper.
Yeah, I mean, you made quite a splash when you came on CNBC a few months ago after one of the Fed meetings and started talking about 2022 rate hikes right after Powell was super dovish and talking about transitory inflation. Has the Fed, the core of the Fed, moved more toward your view of a rate hike in the coming year?
I think that if you look at the median of the summary of economic projections, there have been more participants moving into 2022 as a possible date of liftoff. I would say that, and the chair has said that we do want to keep the idea of the end of the taper separate, and the tapering, generally speaking, separate from the date of liftoff, which is, it's a separate decision for the committee, and there's no reason for us to commit one way or the other at this point. But I just want to be in position, if in case we have to move sooner, that we're able to do so next year in the spring or summer if we had to do so.
We saw the short end of the yield curve move higher today, really in reaction to the same thing happening over in Europe yesterday, whilst US bond markets were closed, as there was talk that we might even get a rate hike this calendar year from the Bank of England. When you see those sorts of moves, does it at the margin help the US's cause in the sense that there's a bit of tightening going on without you having to hike rates, or is the opposite true, that if other central banks get going before you, it might force your hand?
I don't know if there's any sort of direct feedback there. I think the Bank of England has to handle their situation. They're a more open economy. They've probably got other concerns other than the ones we have here. Inflation tends to be higher in the U.S. here than other places in the world.
In Europe.
And I think part of that is that the fiscal and monetary response to the pandemic has been so aggressive in the U.S. And so that's probably feeding in. One thing I would say, a lot of people say, well, inflation's up because this is a supply shock. But what I would say to that is that a supply shock alone cannot cause inflation. It's a supply shock being accommodated by very easy monetary policy. It's those two things together that lead to the inflation. You can't get inflation just by having one price go up. It has to be all the prices go up in tandem. And that only comes about when the monetary policy is accommodative in response to a supply shock.
What about stagflation? We're seeing more and more mentions of it in the Wall Street notes. A lot of sell-off lately has been blamed on this idea of slower economic growth at the same time of persistently high inflation, which is a bad recipe. Reminds us of what happened in the 70s. Is that a concern for you?
Yeah, I'm not quite sure. People have been debating around about this, but in the 70s, you actually had outright recessions with inflation going up. I don't think we're going to get into that situation. I think the probability of recession is exceptionally low at this point. Like I say at the outset, I said, well, we're in great shape for growth going forward, even though the third quarter doesn't looks like it's being revised down quite a bit. We'll get that number here at the end of the month. But I think slowing growth and higher inflation, while growth was 6% plus in the first half of the year, you'd probably expect something slightly less than that. But I'm not sure I'd call that stagflation. I think that's a overselling of the term stagflation.
So switching focus a little bit, we had Senator Warren on the show last week, and part of the discussion was exploring with her in more detail why she felt Chair Powell was a dangerous man. And as you know, part of that comment initially from her stemmed from the fact that she felt regulation on the banking sector had been eased too significantly. What's your response when you hear politicians use such extreme terms like that towards someone you know very well?
Yep.
We're used to it. We've got tough skin here. We always get criticized from all sides. I sometimes take that as a sign that we're doing something right if we get criticized from many different angles. I think, as far as the regulatory situation, the big picture is that Dodd-Frank was passed. There was some talk at some point about repealing Dodd-Frank. That never got traction. It's the law of the land now, and you had both of the authors, the leaders on that bill, Chris Dodd and Barney Frank, saying that it was basically intact at this point. So I think we're in as good a shape as we can be, given our political process, to get good protection for the banking system, and we've tried to implement that as best we can.
He especially has gotten it from both sides, first Trump and now Warren. So finally, this whole controversy over stock trading has added a new element and a new dimension. I don't think that you have been as actively trading as some of your peers on the Federal Reserve, but
Just buying puts.
do you think that you guys should be able to trade stocks as you have?
Only puts.
Yeah, the way I see this is that Congress sets the standard. They're the top policymaking organization. They're deciding on tax policy, regulatory policy, all kinds of things. So they set the ethics standards, and then that spreads out to all the agencies, and we have to certainly follow.
Nice deflect.
Congress wants to raise that standard. I think that's definitely their prerogative as the elected
But should
body,
they?
and then all the agencies would have to follow through. That's a political question for the Congress, but if they do it, then that means members are going to live with it, and staff also are going to live with whatever standards they set. As far as I know, we've met the congressional standards so far, but we are looking into it, and Chair Powell has promised extensive review of the situation.
James Bullard, always good to talk to you. Thank you for joining us here on Closing Bell.
Great. Thanks a lot.
President of the St. Louis Fed.
Up next, in the wake of a CNBC investigation into stolen cryptocurrency, one trading platform boosted its customer service, but many.
Let's go ahead and do a recap of that. That was actually very interesting. Let's do a recap of that with whatever. Stupid mic. Let's do a recap of that with CPI forecast. Let's grab that really quick. Give me 1 second. I have to go to the economic calendar. And once I have the economic calendar, I could give you the data. Okay, I have it. All right. Cool. There's some interesting things he said there. So let's do a recap of that. All right. Y'all ready? And we'll start it like new video. Okay, sorry, just got here. Are you still expecting a small curve to the downside on CPI? Okay, we'll talk about that. We'll talk about my opinion on CPI. CPI expectations and my opinion. All right, we'll do that. And we'll talk about Fed and CPI. All right. Let's get right into it. Here we go. Hey everyone, me Kevin here. Let's talk about what the Federal Reserve just said, because we just had an interview on CNBC that gave some potentially scary insights. Now, this was just one member of the Fed, but this guy's buying puts. Let's just say that. This guy's sitting in the board meetings on his Webull or public.com going, wherever you can buy puts, and he's buying puts. And let's go through some of the things he said. And then let's talk about CPI expectations for tomorrow. Today is October 12th. On the 13th of October, we're going to get the September inflation readings. I'm going to talk about expectations for those. Those come out at 5:30 a.m. California time, 8:30 a.m. Eastern time. So set your alarm if you're on the West Coast a little earlier than usual. Mr. Bullard just came up and discussed how he's been advocating getting the taper process done as soon as possible so that we could be in a position to react to, quote, possible upside risks to inflation next year. Now, it's worth noting kind of where consensus is right now. Consensus is that we're going to raise rates for the first time in the second half of next year. So just to give you a little quick chart here, I would write this down somewhere. I think this is important. The expectation right now is that in November, we start the taper. So this is really going to be the start. And so this will be the taper line over here. So this is November 21. And right now, the expectation is that we end, and I'll call it end E for expectation, is probably June. Is what I would say, because they had mentioned mid. So I'll put June / sort of mid over here, June mid. One board member came out a couple of weeks ago and suggested a potential end. So I'll put end 1 over here. That doesn't look too good here. Let's use a smaller pen. There we go. End 1. And they suggested the fall, but Bullard He's counteracting that, and he's going pretty aggressive. And so far, the data's kind of been leaning in his favor. And so, really, what we've just heard is a potential taper as early as Q1. So I'll put N2 here, and this would be a Q1 end, which would be really by March. And the reason he wants to finish the taper here is so that rather than potentially raising rates in the second half, which this is the expectation right here, is this would be called liftoff over here. So I'll just write that, liftoff. Liftoff is just a fancy way of saying rates go up. And that's the expectation right now. So we'll do E again. But his suggestion is that we're ready to basically raise rates right after March. So potentially an April, May raising of rates. And that's because he's more fearful about inflation taking off so far than many others. This is, let's just say during his discussion, all you had to say was he's buying puts, and pretty much what he was saying aligned with that. He says that third quarter growth has been marked down. He does think it's overselling this economy to call it stagflation. He suggests, hey, look, we've gone from 6% GDP growth at the beginning of the year to 3 to 4% growth now. That's not really stagflation. It's just a slowing down. But he does also see that growth is kind of stalled here in Q3, but he doesn't believe it's evaporated. He believes it's just been delayed into Q4 and the first half of next year, which is right where he really wants to talk about raising rates anyway, because he thinks, okay, we had a little pause, like we hit the brakes a little bit on growth with the Delta fears right around August, but now we're hitting that gas again, and that's potentially going to contribute to inflationary forces kind of hurting us at the beginning of next year, which is interesting. He's talking about this on the eve of CPI data, which we'll talk expectations in a moment. I personally, and no guarantees, but I personally think these people get a heads up on these reports before they actually come out. Who knows if they actually do. But anyway, he says that total growth will be diminished. Plenty of reopening still has to be done, though. And we particularly have a lot of fiscal support, so congressional support and monetary support. I mean, some would disagree with that, saying that our unemployment boost has been removed, but then we do have the child tax credit that's flowing pretty well and it's going to be flowing through about tax season of next year, so about April 15th of next year. So you do have extra stimulus that you didn't previously have. This is on a monthly basis, right? $300 per child, under 6, and $250 per child under 18. It is true. That is stimulus. Every 3 months, that's like a $1,200 stimulus check per child. Think about that. It's actually a good, that's a potential inflationary pressure. He does believe that the pandemic is coming under greater and greater control thanks to pills, obviously a reference to the Merck pill, boosters, all this on the horizon. He believes there's a good probability, about a 50% probability that things will just be stable and that we get to about a 3% unemployment rate, maybe the upper 3% of the unemployment rate. But he wants to leave some openness for pricing in the risk of inflation going, quote, higher and higher, or rather, I think he said, quote, staying high or going higher. That was his quote. That's the risk I want to be able to handle at the end of the taper. And that it's worth understanding why he would say that. So we go back to this chart right here. If you all of a sudden get hit with inflation and your interest rates are at zero, now all of a sudden you're in this position where you're potentially creating this lagging monetary support where, let's say, interest rates are at zero until June of next year. Just to explain what I mean here, say interest rates stay until zero here, but all of a sudden we have, I'll call it mega inflation right here. Well, it's too late because to raise rates, I mean, obviously they're going to raise rates, but it's too late because this 0% monetary support is probably still going to push inflation higher. So we'll call it like super inflation, right? As time goes on, because it's going to take a while for, let's say, a rate increase to actually take effect. Say you go up 0.25% or whatever, you end up going up. Doesn't really matter. This is more just an example here. So really what he wants to do is say, well, if there's a chance we're going to have, let's say, mega inflation by the middle of next year, let's start raising rates now. And let's go to 0.25% or 0.5% sooner. So that way, if we do get over here, we're starting to kind of hit the brakes early. It's kind of like we see the traffic light. We're going to start taking our foot off the gas a little earlier. And being prepared to and actually potentially even starting to hit the brakes sooner, so that way we don't have as abrupt of a stop, because it takes time. It's like stopping a semi truck. Although some semi truck brakes are pretty incredibly fast. So maybe a better analogy is it's like trying to stop a cruise ship. You should probably start taking the foot off the gas early. Maybe hit those reverse propellers a little sooner. This particular member of the Fed has been somebody who's been a little bit more hawkish than other members. Even Sarah Eisen pointed out that he was a person who came out as hawkish against inflation, while at the same time Jerome Powell was coming out as a dovish about inflation and how transitory inflation was going to be. Obviously, transitory inflation has lasted a whole lot more than expected. He does mention that more participants are moving into 2022 for liftoff. So in other words, more board members are joining him with raising rates. Sarah Eisen asked, hey, the Bank of England talked about maybe doing a rate hike at the end of 2021. He kind of separates himself from what the other countries are doing. He also says that inflation tends to be higher in the US than in other places of the world. I think he's referring to Europe when he says that, because our inflation level tends to be lower than other countries outside of Europe. But whatever. So then we've got an interesting comment about supply shocks alone cannot cause inflation. They have to be accommodated by easy monetary policy, because all prices have to go up together at the same time, which is somewhat what is happening. We are seeing that. So he's saying it's not just supply. This is where Bullard is coming from, and where he differs from Powell, is that stop calling this just a supply shortage. It's supply shortages and easy money. That's what's leading to this inflationary pain. So CPI is definitely going to be on Bullard's radar here. And he's a big advocate of staking his claim that inflation is going to get worse before it gets better. And he wants to be prepared for that risk and wants to taper sooner. Definitely wants to taper in November, wants to accelerate the path of the taper, even though, and I'm surprised they didn't ask him about this, even though the last jobs report came in weak. Not a single mention of that weak jobs report. A little bit surprising not to see that on the radar. More the focus again, inflation. So let's talk expectations for tomorrow. So we have an expectation of month-over-month inflation coming in at 0.3% tomorrow. Minus food and energy, we're expecting 0.2% tomorrow. CPI year-over-year headline read expected to be 5.3%. That is unchanged from the prior month. We'll see. We have a lot of expectations here. We also get the FOMC meeting minutes from the September meeting. That'll be released at 2 p.m. Eastern time tomorrow. So we've got a big news day tomorrow, meeting minutes and CPI data coming out tomorrow. These meeting minutes are expected to show the Federal Reserve probably being a little bit more dovish in response to Delta and a miss on the prior jobs report from August, thereby deciding to wait to taper until November. We do, again, have big expectations for CPI tomorrow. If this inflation comes in at a match, I expect the market will be stable. Right now, we have been seeing a softening on the 10-year Treasury, which kind of implies that the market is thinking CPI might actually come in potentially a little bit weaker than expected. Maybe not, though. We'll see. I think the vast majority of the market participants like us and institutions are really thinking that inflation is going to come in maybe higher than expected. My hope originally this year has been that inflation would inflect down in the September-October reads. Tomorrow is that day. Tomorrow is that September read. And we'll see if my timing was right or wrong, or if it's just delayed. Personally, I'm not as optimistic about my original belief as I was previously. And that's because we are still seeing used car prices going up. We're still seeing lumber prices going up. We're still seeing pain in the commodity sector, which drives up inflation, certainly energy costs. If I look at the Manheim used vehicle index right now, we have, let's go to the 1 month. We are, okay, let's see here. I'll try to get this out again. Yeah, we're higher again, higher than well, this is for September. Okay. We're higher again than where we were as of our peak in May. We did have a little bit of a trough there at inflation, which was expected in July and August, but we're inflecting back up. So really looking at some things like used cars, supply chain constraints, freight and shipping issues that we're seeing, inflation isn't getting better. So I can't be optimistic for tomorrow. if anything, I think there's a chance that we like, if I had to stake my ground right now, my hope would be like, okay, 60% we're gonna miss, we're gonna get that inflection on the downside. My expectation is a 60% likelihood that we're probably gonna have a match or a beat on inflation, which is not gonna be so great for probably for tech companies. Maybe that NASDAQ and S&P getting hit again. Personally, I hope it gives me opportunities for deals. I'd even be considering starting a position in Baba. QCOM's been looking juicy. Some of the value plays, or really just lower multiple plays. Don't necessarily want to call them value plays, but lower multiple plays like Corsair, Micron, Western Digital, some of these, United Wholesale, a mortgage company. Some of these have been pretty low. Wouldn't be opposed if we do get an inflationary read and some more pain and supply. Wouldn't be opposed to trying to pick up a deal on Enphase. I'm sorry, on Etsy. Etsy. You already know I'm into Enphase and DocuSign and Tesla and the others. Potentially call options on Tesla because volatility has been so low. And then, of course, as usual, if I make any trades, you know I will be sending an alert on any of those in the Stocks and Psychology of Money program linked down below, which there will be new lectures coming out on October 24th, and the price is going up on October 29th. So make sure to check that out down below. You can also check out the real estate programs on real estate investing, building your wealth with property management, rental renovations, real estate agent sales, or even making YouTube videos. So check those programs out down below. These are my thoughts on not just what the Federal Reserve said, but on CPI tomorrow. I'm very excited and a little bit anxious, but I've got some cash on the sidelines. To those weirdo commenters who are like, wait, it was just not that long ago. You're like, oh, I have all this extra cash. I bought the dip in September. But I do still have cash on the sidelines, and I'm excited. So we'll see what happens. No matter what happens tomorrow, if we get a miss in inflation, I'm just gonna sit around and enjoy the gains. If we get a beat on inflation and we get a fall, I'm gonna go shopping. It's gonna be good. I do still have my crypto position, worth mentioning. If anything, I've increased my crypto position in the last dips. It is higher than what I've ever had before. I think I'm at 1.2 in crypto right now, which is the highest that I've been at in terms of crypto. So there you have it. My thoughts. Thank you so much, folks, for watching, and we'll see you all in the next one. Thanks.